Whoa, howdy there, folks. Hello, whoa, baby. Woo, is it going to be crazy today? Alrighty, so we're going to check on the market in just a moment here, which I believe there's quite a bit of Red Dead Redemption out there today, folks. Ooh, yeah. Oh, yeah, baby. A lot of Red Dead Redemption out there today. Look at this. Just have a look at this, huh? Oh boy. Oh my goodness. Hello everybody in the chat. Hope you guys are doing phenomenal. Busy. We got a busy day ahead, folks. A busy day ahead. Holy smokers. This is no dang jokers. Let's see what a heat map's looking like here today. You do have a little green out there. It's not much, but you do have a little bit of green out there today, huh? You just gotta know the right pockets to look, I guess. Procter & Gamble and Pepsi and a few of those guys actually green today. But other than that, it's just a lot of Red Dead Redemption. McDonald's. Alright, let's see what's going on here. Oh, Netflix earnings after the bell too. Can't wait for Netflix.
Has undertaken
Netflix
over the
and
last
Tesla.
year to 2 years, one being initiating an advertising tier, the other being a crackdown on password sharing, both of which were big, important parts of the near-term bull case that have been slower to develop than people had anticipated.
All right. Before we get to Paramount, where there's more of a split as to how you guys view its fortunes, let's talk Disney, which controls Disney Plus and Hulu. You both actually seem pretty optimistic here. Mike, you're a buyer, is that right?
I am. I have a buy on the stock. Similarly, we really believe in the long-term potential. A little different from Netflix. Disney has some things they need to work through with respect to what the platform...
Disney has a lot to work through in all due respect, sir.
Denies the power of the Disney brand and the Disney content and what that can do for a platform like Disney Plus. But Hulu, the ownership there is more fragmented, right? Disney is working through consolidating complete ownership of that asset. And I think that's slowed the development.
Hey, we hit a hype train. I don't know what it means, folks, but we hit the hype train. All-time record. How about that? Woo! Hype train. I don't know, man. It sounds cool. Hype train.
Compete with Netflix in our mind.
Sean, you also think Disney Plus could turn things around?
Yeah, they've just enacted this month some price hikes. So from a financial point,
I think since we reached that hype train, I think Twitch should send us all a free share of Tesla. Or one free call option for Tesla after the bell, or one free put option, depending on what you want.
If you will. So they're still releasing new content, but the amount of Marvel series we're seeing per year and Star Wars series per year are far lower than we've had in the past, which lowers your costs, which again helps their financial situation. So they're, then Iger has said they'll be reaching a profit by this time next year. So they are probably on track to do that from the price hikes alone. And if they can lower those costs of content to a more reasonable level, you can see how that comes together in a better picture
Quick
for that.
thought, Michael, because I want to leave room for the next one, and that is, would you view a spinoff of ABC, the stations, the network, as a stock positive? And what about ESPN?
I wouldn't.
It's a very complicated question, so I'll try to be very straightforward. We first and foremost believe in the power of the Disney brand, and that includes everything from the Disney films and television product through their streaming service and the parks. That asset we're 100% believers in. When we look at general entertainment, okay, and that can include Hulu, ABC, but it is very intertwined, okay, and that makes it a complicated question. We do think the company needs to take a hard look of why they want to be in that general entertainment business and how much they need to invest. But talking specifics about separating asset X or Y gets a lot trickier because some of that content is intertwined.
100%.
And that makes it difficult to parse each piece out.
Very interesting to learn how you think about it. All right, let's move on finally to Paramount. Sean, you say worst in terms of content library. Tell me why.
Well, it's the Taylor Sheridan universe. Unless, he's producing most of their content right now. There isn't a plethora of things from a
thing Disney, in my opinion, should do. Disney needs to say screw like all this. We're going to try to make Disney Plus, and we're going to have Hulu, and we're going to try to have all our own, avenues of selling to end consumers. Like Disney, when it was at its best, folks, was a Disney that was not in those sorts of businesses. They were just focused on, I want to get ESPN on as many platforms and make as much from that as possible, have ABC on as many platforms and all our other networks as well, and worry about making money that way. Instead, now they're trying to compete with the satellite companies, the cable companies, the the streamers, YouTube TV, Fubo, which obviously I'm watching this on, right? And all these other guys, and it's like, now you're putting yourself at competition against guys that you should kind of be like friends with, right? So, I don't know, I just think, to be honest, I think Disney's been making a lot of questionable decisions, and it just seems like they're having trouble getting out of it. So, anyways, by the way, we got a level 2 hype train now going on. So we just set a new record for the level 1 hype train. So maybe we're going to set a new record for the level 2 hype train on that one.
All right, so Dan Ives, speaking of growth as it relates to Tesla, which has had its own issues.
Oh, here we go. Dan Ives, Mr. Tesla Bull.
They want more growth, and Musk is obviously willing to keep cutting prices to get there.
Look, I think so far the strategy's paid off in terms of cutting prices for volumes, and we've seen that with demand, I think, holding up strong relative to the macro. But Scott, no doubt, I mean, there's a line in the sand here where I think investors going into this print are nervous that more price cuts could be on the horizon.
You told me before that you thought they were done. They're obviously not done.
So we believe they're about 95% done.
Wow.
And what I think is going to be key on the conference call is them basically putting a line in the sand, like there could be some price cuts, but ultimately the vast majority in the rearview mirror. And we believe margins now trough out this quarter going into Q4. And that's really been our call here, is that you navigate through the sort of trough for margins. They're in a point where they continue to own the EV market. And that story, in terms of going after demand and volumes, that's been the right poker move, in our opinion, from us.
Well, what makes you believe that they're done with the price cuts, as they obviously are laser focused, Musk is, on competition? They have to be done with the price cuts in order to hold up the margins that you say will.
Yeah, that's what I'm concerned with. I'm concerned with inventory starting to pile up, and I'm concerned with margins in a big way.
Some margins, but I think that's been the right move in terms of going for volumes and
what is that?
The thrones that's going on. To me, it's the Model 3 refresh. What we're seeing in China in terms of what I believe is sort of...
Somebody gifted somebody a sub. I didn't even know that was a thing.
No demand, obviously, in this macro, not roses and rainbows. When it comes to EV, it continues to really be Tesla that owns the market. And I even think what you see with the UAW strike in Detroit, that big competition that was going to come, that's really been a gut punch to what we see with Ford and GM. So this is a time for them to go on the offensive, not defensive.
So Dan Ives is basically calling for Tesla to trough margins right now in this quarter they're about to report here in the next hour. And that's a big comment to make, certainly. And, if that would be very bullish if Musk and the team say, yeah, we're bottoming out margins right now.
Biggest boost historically rather than any other. I think it's 4% on earnings day. What do you think?
Well, I think, look, a lot of numbers across the board. You've seen the Band-Aid ripped off in terms of number cuts. I think the big focus here, Scott, is really gross margin. When you look at auto gross margin X credit, can it be above 17%? I think that's sort of the whisper number that the streets focus on. But the most important thing, the drum roll, will Musk commit to basically the vast majority of price cuts being done and margins troughing out here? And what I believe, look, take a step back, still talking 35% type of growth from an auto delivery perspective, where others, have seen tepid growth.
Is Netflix's near-term growth at risk, Alex, do you think, as a result of what's happening with the ad uptake, if you want to call it that? As you said, it's going to take a bit of a while to build it out. Who knows what sort of economy we're going to end up with in the next 6 to 12 months.
So Tesla obviously getting hit. We're at about a 5% downward move on Tesla now at this point in time. Look at even Pfizer's getting hit hard today. Pfizer's down 4%. Jeez. Look at winning resorts. It's losing resorts here today. My gosh, down 4% plus for Winnie. Makes me want to buy some Winnie today. We got Nordstrom right under $14. Palantir's getting hit pretty decent here today, 3.3%. Obviously, the stock's had an incredible year, but no doubt that's a pretty hard hit here today. Shopify's getting hit. The Planet's getting hit. Amazon's getting hit. Vaunt down a little bit. As far as green, I have hardly anything green today. Texas Roadhouse is green. Freaking Honest is green. What is the world up to? When Honest is green, you got to be flipping my flapjacks. And obviously, Estow's having a really good day, so my hedges with Estow are certainly printing a little bit of money here today with the Dow getting hit pretty hard, because remember, Estow is basically a 3x against the Dow Jones Industrial Average. So if, on a daily basis, so let's say the Dow is down 1%, the Estow is going to be up 3% in that same day, right? Let's check out possible buys watch list. Oh, wow. Rivian getting smacked. I put that on my possible buys. I don't know if I'm going to really buy. I doubt I'm going to buy Rivian, just to be quite honest. But I put that on there anyways. But yeah, Rivian getting smacked today. Woo! RH getting smacked today, 4%. We spoke about Win. Estee Lauder. EL, baby. Estee Lauder getting hammered. Love it. 138. I want Estee to keep pushing down. Keep pushing down, Estee. You're not finished, baby. We need you all the way down, all the way to Chinatown, okay? All right, let's check out the Dow stocks here today. Obviously, WBA the hardest. WBA better watch out. They're going to get freaking kicked out of the Dow. This stock's doing so bad. Look at Caterpillar today. Caterpillar getting smacked. Wow. Getting smacked hard. E-commerce. E-commerce, yeah, you know, about what you would expect. Oh, let's check out the Slaughterhouse. You guys know the Slaughterhouse? If you watch my videos a lot, you know the Slaughterhouse. It is FinTech watch list. We call this the Slaughterhouse, and it is a Slaughterhouse here today. Upstart, 8.5% down. Affirm, 6% down. SoFi, 6% down. Rocket, RKT, which is just getting brutalized right now because, no one's buying homes right now. No one's refinancing right now. And so Rocket's just in a horrible spot right now. That stock's down over 4% here today. Coinbase is down over 4.5% here today. The Hood's down 4% plus. Square's down. And PayPal's getting hit the least. But PayPal's $55 freaking dollars. You got to be flipping my flapjacks. How many PayPal shares I'm going to own by the end of the year? The whole damn company? Holy smokes. Look at housing stocks here today. Brutal. Redfin continues to just get pummeled. Redfin down 6.4%, folks. 6.4%. My gosh. By the way, thank you everybody for being here. Thank you for being subscribed here. Thank you for following here. Appreciate everybody. It's a busy live stream, man. And this is a beast of a live stream we're going to be on here today, folks. Let's check out big tech. Tesla is the worst stock of the bunch. NVIDIA getting hit again today. NVIDIA got hit hard yesterday, like really hard yesterday. NVIDIA far underperformed anything else in big tech yesterday. Snowflake getting hit hard. AMD getting hit hard. I think that's the noise for when somebody gifts somebody a sub. That's pretty freaking cool. Giving 2 gift subs on this channel. Hey, shout out to that person. Shout out to Pigley? I don't know how to pronounce it. Holy smokes, they gifted 2 subs? We're going to call them Jeff Bezos? Warren Buffett? Holy smokes. We got a Buffett in the crowd here today, gifting out subs left and right. Let's take a peek at crypto today. What's going on with crypto? Not a lot. Is this just me, or has crypto kind of gotten boring, like, over the past year? Like, I feel like crypto is just kind of like, You know, it used to be the thing that was just like crazy. It was the most volatile, and now it just seems like, So my hedges are doing very well today. Obviously, I got the Tesla hedge on. I got Polaris hedge on, which has been doing tremendous here recently. If you pull up a year to date, like, dude, my freaking Polaris hedge is like, it couldn't be in a better situation. Like, literally, everything's going perfect as far as that. My Toll Brothers hedge is coming along very, very well. Apple hedge is okay. It could be doing better. SDAO, I need the Dow to keep dropping over this next at least few weeks to maybe month or two. That would be ideal. There he is, Dan Ives. Talk to us, Mr. Bull.
I think the big theme, we'll see it next week. I think when it comes to Microsoft, Amazon, what we'll see from Google, I think cloud, you're going to see an acceleration. The AI monetization, it's not just the godfather of AI, NVIDIA. I think now the rest of tech starts to participate in the party. That's going to be important in terms of this earnings season.
10, 11 months or so, Alex, into this whole AI hype machine. Did we overdo it at the beginning? Are we just right? Where do you think we are?
I think we overdid it a little bit. There was a belief that this original version of ChatGPT and the OpenAI GPT 3 and 4 models were transformative. They're the step to getting us there. In the meantime, we've seen a lot of building from enterprises, a lot of differentiated chatbots, not just the general purpose chatbots, but something that's being used for law, something used for medicine, something specific for students, plenty of these character chatbots coming from a company like Meta. We're in the settling out moment right now. I mean, to match the hype that we saw 10 months ago, scale would have been nearly impossible. But that being said, unlike some of the other big hype and big trends that we've seen in tech that haven't amounted to anything, I am seeing tech companies really build with this stuff, deliver actual benefits to their customers. And so this is real. It's just going to take a little bit more time for it to ramp up.
Which leads me back to Jason Snipe, who's going to get our last word today, because NVIDIA is where many bets have been placed.
Love to hear your guys' opinion. Tesla, what do you think in after hours? Are we going up Tesla or are we going down Tesla? Let me see predictions in the chat. Up for Tesla after hours or down once those earnings hit? Somebody says up. Tesla will drop on numbers release and then rebound as earnings call. That is a potential. Let's assume numbers come out, margins are bad. Let's say they dropped a bunch more. Let's say we see the inventory number go up quite a bit. Everybody's like, oh my gosh, Tesla's inventory is climbing and they have margins continue to drop. Let's say profitability drops. Everybody's freaking out. But then we get on the conference call and Elon and the management team says, listen guys, we know numbers are bad, but guess what? It's only going to get better from here. We expect margins to start improving this upcoming quarter. Woo! That would be a huge sigh of relief, right? If that actually happened and if people actually believed what Elon Musk would say and the executives of the company, that would be immensely bullish. And you could actually see the stock pop on the conference call, which would just cause more confusion to folks out there. But don't automatically assume that's what's going to happen because we don't know, okay? A lot of people saying Tesla's going to be down. Somebody says it's up. It seems like the overwhelming amount of people believe that Tesla's going to be down on these earnings. I believe those stocks are going to bottom, okay? I believe they're all going to bottom in likely this quarter we're in right now. Why do I believe that? Well, I believe fear around rates, interest rates going higher, likely peaks in this current quarter we're in. I believe everybody that's going to have wanted to sell these stocks will have already sold these stocks by the end of the year, folks, okay? Like, you're going to get tax loss harvesting into year end, and anybody and everybody who is going to want to have sold these stocks will have sold them off. No different than what happened to growth stocks last year. Every freaking person that wanted to sell Tesla had already sold Tesla last year, right? And so this year, you just got that buying pressure to come in, and, it was overwhelming because there's just not nearly as many sellers, right? And a lot of people looking to get back in those guys. So I believe all these stocks bottom likely this quarter, and then they start to recover in the first half of 2024, and then they start a much bigger recovery in the second half of 2024. That's my personal belief. We'll see how it plays out, but that's what I believe in regards to these dividend stocks, and that's why a lot of my focus recently has actually been on a lot of these dividend stocks, in value stocks. Look at what I just bought today. I bought those 3 stocks. Wynn's a dividend stock, WBA is a dividend stock, PayPal's a value stock, trading at 11 times forward P or whatever, right? So you look at that pretty much across the board. Thank you everybody that's following here. Thank you everybody that's subscribed. We're getting close to Tesla earnings coming out, Netflix earnings coming out. We're going to listen to the conference call, the Tesla conference call on here. Whew, baby, this is a fun one here today, folks. This is a fun one here today. Let's see trending news. Oh, look at this trending analysis. PayPal, a 6-year low, seriously? PayPal stock's trading at a 6-year low, presenting a compelling opportunity for investors. Despite competition and uncertainty, PayPal's pricing structure provides a margin of safety and potential for substantial returns. With its massive scale, PayPal can defend its position without aggressive price hikes, focusing on improving profitability. I would agree with that. That might be an interesting article I have to read all through there over time. That seems actually really intriguing. Let me jump here what they're talking about.
This is out in overtime tonight. Phil LeBeau on what to expect from Tesla. Julia Porson, of course, on what to expect from Netflix as well. Mike Santoli, I begin with you. You want to just opine on sort of, here it is, the start of tech, important tech.
Yeah. Well, it is the start of important tech, and I think that what traders might wish for is the ability to focus on those numbers as opposed to trying to worry about, are we getting, these kind of quick silver moves in the bond market? Does it mean there's an underlying instability? This morning, 10:30 a.m. Eastern time, 30-year yield ticks above 5%. And that's the high for the day in the S&P 500. We're down 1% since that. So it shows you the very short-term seesaw action that we have with stocks versus bonds. On the other hand, we were at this level on the S&P. We're basically at last week's lows. It was from Friday, 43.11 or something. We were about this level September 22nd. And the 10-year was under 4.5, right? So there's a way for the market to try and establish some kind of a peace treaty on the short-term basis with where yields are, unless it seems like...
Oh, we're at 444 people in the live stream right now. I just love that number. If you know me, I love, like, all the same numbers all in a row, like 444, 555, 222. Like, I love that stuff, man.
Refuses to go above 20. That's because the S&P is only down 0.25% this week. Like, where's it supposed to go? We've been trapped in this range. On the other hand, the VIX near-term futures are trading above the December. My point is, you're starting to see the market tense up, but it doesn't really know why, because the economy is relatively strong. Earnings are expected to go through. And it just wants the bond market to tell them we can relax a little bit.
Well, let's see what happens in overtime, if it helps us feel something in either direction. And Phil, I'll go to you first with what Tesla has on tap.
Scott, aside from the top and the bottom line, that's always in focus. It's the numbers within the numbers. And I know people are tired of hearing about gross auto margins, but that really is the key metric that people will be focused on. 3 things to look for in the earnings report. 17.6 is the estimate on gross auto margins, excluding the zero-emission vehicle credits. Look, if it's close to that, it's not going to move a lot. If it's dramatically lower than that, it raises the question, how much lower will margins go in the future? That depends on pricing pressure. And what do we hear about the Cybertruck? Will we see first deliveries in the fourth quarter? As you take a look at shares of Tesla, remember that the conference call starts at 5:30 p.m. Eastern time. We expect to hear from Elon Musk at that time. And when he's on that call, the focus for the analysts will be, what is the Chinese market doing right now? Brutally competitive on pricing over there. What does Elon Musk say about that? Obviously, there will be some other questions in terms of development of the new gigafactory down in Mexico.
I'm going to show you some pictures out of China in just a moment here, folks. My friend took of what's going on in China.
All right, Phil, we'll talk to you.
By the way, thank you everybody in the chat that is asking questions and also saying nice things. Today's live stream is crazy, so I'm probably not going to be able to get to everything. I'm trying to get to as much as possible while doing all this, but I just want to say thank you everybody that says kind words, and also thank you everybody that's asking questions. It's just today's live stream's freaking busy, man. Super busy.
The Street's projection of 5.5 million subscribers, that is the number to watch. It is down slightly from the subscriber additions last quarter. Netflix shares are down about 5.5% in the past week, with 50% of analysts now rating the stock a hold or a sell. Wolf Research recently downgrading the stock to pure perform, writing, quote, while Netflix is on course to build a massive advertising business for the long term, we have rising concern about 2024-25 growth forecasts. Now, those issues around advertising, et cetera, plus any commentary on the strike, expanding video games, and even the financial opportunity around new experiences, those are all sure to be in focus. Scott?
Julia, thank you. We'll see you in just a bit as well. 2-minute warning. You heard the sound effect, which means I go back to Mike. Banks haven't traded well today.
No.
Morgan Stanley, having its worst day in a few years, obviously, but transport's no good.
Yeah.
United, JB Hunt. So you can find some negative stories really in many different places.
There's no doubt about it. Today was a day when there was some questioning about the strength of the cycle, certainly in terms of transports, both trucking and airlines, as well as just broader industrial. So it seems that...
We'll come back there in just a second. A friend sent me that out of China. He says those right there are about $20,000 in China. Brand new, $20,000. And since the EV, he was saying that you don't even have to pay a tax on that. So it's like $20K straight up. So what do you guys think about that for $20K? I would love to hear your guys' opinion.
Break anything.
Well, now we're at 8.
Exactly. So it's always like you can't really rest until you get a sense of if the economy is able to absorb this much of it. When it comes to Tesla and Netflix, I think it's I think expectations have kind of come in a fair bit.
I agree with that.
I think the sell side is a little cautious. Netflix, none of them look cheap. Tesla's still an $800 billion market cap company at 70-something times earnings. It's not as if it makes sense for the size of the business today, but it's.
Somebody said it looks like a Fiat 500 on roids. I could see that.
If that really pays off at all. Because as you say, in general, stocks have not traded really great off of earnings, but that doesn't mean that the earnings aren't there and moving in the right direction.
And this is the one earnings report in the one quarter more than most.
Here we go. Here we go. Here we go.
And we're going to see shortly, because as we wind down here, we're going to close with the Dow off by more than 300. So it's been that kind of day across the board. But it's all going to get real in overtime with Morgan and John. I'll send it over to them right now.
Everybody clap for all the money we just lost.
to the close, but nowhere near enough to make up for the
a lot of Red Dead Redemption.
That is the scorecard on Wall Street. But
alrighty, folks, before the earnings start popping here, folks, everybody, guess how much was the public account down today? It's time to play our game. We got to get this game in quick because we got all these earnings about to hit. So we got to play this game fast, guys. Everybody, get in your guesses. Comment section. How much was the public account down today? Dollar amount, not percent, dollar amount. How much was it down today? I'm about to pull it up and put it on the screen. Get in your guesses quick, quick, quick. Freak! It's worse than I thought, folks. Oh, get in your guesses quick. I'm about to pop it up in the next, 15 seconds here. 15 seconds, I'm popping it up. Oh, man. I was not expecting to be that bad. $52,000 here today, folks. $52,000. The public count was down. Woo! Oh, boy. It's a rough one, folks. It was a rough one here today. Alrighty, folks, it's earnings time. You guys ready? You guys ready? Let's go.
To achieve profitability and earn, average margins in these businesses. Remember, a lot of them are losing money. So the fact that you're seeing all the other streamers increase prices gives Netflix that flexibility. I think for the most part.
So strange move happening after hours with Tesla. Obviously, the Tesla earnings haven't come out yet, but the stock's down 1.3% after hours. So it's like, what is that? Some nervous selling after hours? Like, why would you wait to sell right now and not just have got out when the market was open? That's a strange little dealio there. Very strange.
It's company specific.
It's a good point, and we just want to note that Tesla earnings are out right now, going through those numbers too. Mike, the Beige Book, another flurry of Fed speak today as well, ahead of what's being considered by the market, the big event of Powell talking tomorrow. I mean, it would seem like a lot of the commentary has been in lockstep, at least around this notion of tightening financial conditions and what that's doing for the Fed's fight against inflation.
Yep, it all builds toward essentially taking any suspense out of the meeting in a couple of weeks. So it's going to be a hold on November 1st. The Beige Book showing a little bit of a pushback on the super strong things like retail sales and the GDP tracking numbers, suggesting maybe it's a much more mixed picture at the Fed district level. And that also does underscore the Fed's willingness to kind of be patient at this level. But the data are causing, the odds of a hike going up down the road. I think it's all about the long end of the yield curve, though, and credit costs that are attached to it. At this point, the Fed is secondary to what the bond market decides to price.
Oh, no.
All right. Mark, hold on a minute. We're going to fill the boat now with those numbers from Tesla. The stock's about flat at this point after hours, Phil.
It may not be flat for long, John. We have a miss on the top and the bottom line with gross auto margins coming in lighter than the street was expecting. Earning 66 cents a share. The street was expecting Tesla to earn 73 cents a share in the third quarter. Revenue was expected at just over $24 billion, came in at $23.35 billion. There's the impact of the price cuts that we've seen and slightly lower deliveries than expected during the third quarter. Put those two together, and now you have the revenue number. And gross auto margins, another reflection on the pricing pressure that Tesla has been facing, came in at 16.1%. The street was expecting 17.6%. Operating margin of 7.6% with operating cash flow of $3.34 billion. But again, a miss on the top and the bottom line for Tesla. The company earning 66 cents a share. The street was expecting it to earn 73 cents a share in the third quarter. Don't forget, conference call coming up at 5:30. Guys, back.
So I was right on. Everything I predicted came true. Their margins missed, their EPS missed, their revenue missed. That's exactly what I thought was going to happen, happened. Everything played out. Now, the stock's not crashing after hours so far. We'll see what happens on the conference call. But do remember, this is the last 5 trading days with Tesla. If we go back 5 trading days ago, this is a stock that's $264, $265. It's $242 to here today. So it might have gotten a good amount of the pain out of the way. We'll see.
Unveil, because they recently had to lower the subscription price on that, which confused investors. 2, are we sticking to the 1.8 million euro on guidance for total?
And by the way, we will be listening to the conference call live on here as well when the conference call gets started.
That'll be a heck of.
That's why it's such a beast live stream here today,
They're
folks.
still going to make it. And 3, what's happening with the Cybertruck? Are you actually going to get that producing and sold in the fourth quarter or not? So I think the conference call is really going to be what moves the stock. Elon typically is pretty tell it as it is. He blatantly said said, I'm willing to sacrifice margin to sell more cars. Unfortunately, with the weak EV market in China, which again would be a spot I would watch if they were trying to protect market share, but they ended up selling less vehicles for less money. So the miss really didn't surprise me because of what was under the hood with the deliveries number.
Yeah, Adam, I want to get your thoughts on this because at 16.1% gross auto margins compared to other OEMs, it's still so much higher. But Tesla doesn't trade like other automakers. It trades like a tech company. So unsurprising to see the stock maybe turning fractionally lower here, especially since it has doubled since the start of the year.
Yeah, I mean, I think certainly these numbers.
Somebody asked if I hedged Tesla going into these earnings. Yes, I did. Thank goodness. But still, like, you know, I was so worried about revenue margins and profitability, and for all that to come to fruition and, like, you know, all those numbers miss it. It's disappointing to see. Now, let's start going through some of this earnings report here for Tesla Model. So automotive revenue is only up 5% year over year. Obviously, for Tesla, that's horrible. Once again, a lot of this comes back to the current environment we're in with interest rates, right? Very, very tough. Very, very tough. By the way, shout out to everybody that's subscribed here and is following. Thank you for being here, folks. And also, if you guys want to avoid ads for Twitch showing you ads on my channel, subscribe here and you get a free sub if you have Amazon Prime. That way you don't have to get, because Twitch shows like a crazy amount of ads all in a row. So just so you guys know. Energy generation and storage, that was very positive, obviously. 40% growth year over year. So that's, you know. And then services and other revenue, that deserves a clap as well, 32%. But the problem with those businesses is they're such small dollar amounts compared to the automotive business, right? Energy generation and storage and services business is tiny compared to the automotive business. Now, it won't be like that forever. Services long-term, in my personal opinion, is going to become at least 20% to 30% of revenues eventually down the road for this company. But it's not like that today, folks. It's not like that today. So, you know, it's great to see these growth rates. It's just they're so meaningless in terms of the total revenue, right? So total revenue is only up 9% for the company. For Tesla, that's a disaster. Like Tesla, you expect this company to grow 30 to 50% a quarter. 9% is awful, right? Total gross profit was down 22% year over year. Total GAAP, so generally accepted accounting principles, gross margin was down 719 basis points, which is basically 7.19%, okay? If we go ahead and take a peek here, I mean, look at that. You know, we were looking at 25% plus GAAP gross margins in the same quarter last year. Now we're at 17.9, right? And the trend is worrisome. The one good thing I'll say about the trend, or the one way of looking at this positive, is we're not dropping off a cliff when it comes to gross margin. And so what that shows you is likely we're getting close to a trough in gross margins. It's not a guarantee, but likely we're getting to a trough in gross margins now at this point in time. So likely either this quarter we're in or maybe next quarter should be the trough quarter for gross margins, because you see how small the decrease was. Before, this baby was dropping off a cliff from 25% to 23% to 19% to then 18.2% to now 17.9%. You know, it's only a 0.3% difference on a quarter-over-quarter basis. So if you want one thing to, you know, have a little positive momentum, it's the fact that gross margins should be kind of in a bottoming out process here. So a lot of people are asking, why is Tesla stock not crashing after hours, right? Why is it kind of flattish? It's not even a 1% move up or down for the stock right now after hours, despite them missing on pretty much everything. The reason is, folks, the stock sold off heavy going into these earnings, okay? Secondly, everybody's waiting. Everybody's waiting on the conference call that we're going to listen to live on here when it starts, okay? Everybody's waiting for that conference call. What does Elon Musk have to say? What does the management team have to say? What are we looking at for this company? Are we troughing margins? Are we going to start heading back up in 24? What's Elon's plan to do? Or is he planning to continue to lower prices more or not, right? Is he planning to raise prices? Are they getting anything, real cost savings coming down in 2024 in regards to the 4680 cells? Like, these are all things that are going to be talked about in the conference call. They're going to be very important. Cybertruck, when's ramp coming? Margins, right? So this is all you know, stuff that is going to get talked about here. Let's keep going through these Tesla earnings here. So EPS, 44% down on a GAAP basis, folks. 37% down on non-GAAP. Oh boy. Net cash provided by operating activities down 35%. Capital expenditures up 36%. So we're definitely spending, right? Thank you everybody that's subscribed here. Thank you everybody that's following. Appreciate y'all. Free cash flow, folks. Oh no. Oh no. Free cash flow down 74% on a year-over-year basis. Cash equivalents is up 24%. So that's the one positive there. Whew. Oh boy. So, company reduced average selling price due to pricing and mix. Yes, we know about that. Increase in operating expenses driven by Cybertruck, AI, and R&D projects. Yes. Cost of production ramp and idle costs related to factory upgrades. Yes. Negative foreign exchange impact. Yes. Growth in vehicle deliveries despite the margin headwind from underutilization of new factories. Say that's the problem. I've been trying to tell people this. If Tesla volumes are getting hit, it's going to hurt. And people try to argue with this. Like, I understand this company, I think, on a far deeper level than, I don't want to say everybody, but a lot of people. I've been tracking this company since they were a, company burning money. And I know exactly what's going on in this business model. I know so many people that, and been able to meet so many people over time that work for Tesla. I got so many people in the private stock group that, are retired from Tesla or worked there or, made a lot of money off stock options and became multimillionaires. And, I know this company. And I try to explain these points and just people choose not to listen to them because they're just in their own delusional land or they think they know more than me or whatever. But I'm just like, dude, at the end of the day, if Tesla is not in as strong of a demand environment, it's going to start hurting margins in a substantial way and profitability if the factories are underutilized. The best case scenario for Tesla is you are pumping vehicles out constantly and you constantly have the orders coming in. That was Tesla in 2021 and a lot of 2022. Those factories were full go every day, like, every shift, rolling. If all of a sudden things start to slow down, it starts to hit your profitability in a major way, okay? Major way. So they did have growth in regulatory credits, which the bears will point out and say that's not good, right? SNX production down 31% year over year. 3 and Y production was up 20%, so that's decent, right? So really a lot of the weakness is really coming from the S and X right now on the higher end. Total deliveries, 27% growth year over year, right? But why is the revenue not up 27%? Well, because they dropped price so much, right? Average selling price down substantially. Solar deployed, down 48% year over year. Storage deployed up 90% year over year. Tesla locations up 20%, mobile service fleet up 20%. Those are things that have to happen for Tesla's long term, folks. Those are very good things. Tesla's going to keep putting more and more vehicles on the road. We need more superchargers, right, which are up 31% year over year. We need more mobile service fleet. We need more Tesla locations. Those are all very good things overall. They're costly, but they are much needed, right? Kind of reiterating vehicle capacity type trends here. Artificial intelligence and software, vehicle and other software. Thank you everybody that's subscribed here. Thank you everybody that's following. Appreciate y'all. And shout out to everybody in the chat. I'll jump in the chat in a little bit. I got to finish going through these numbers here. And we also I want to hear Tasha Keeney, what she has to say. Alrighty, folks. So here's an important part. What is Tesla's outlook? Here's Tesla's outlook. Volume. We are planning to grow production as quickly as possible in alignment with our 50% CAGR compounded annual growth rate target we began guiding for in early 2021. In some years, we may grow faster, and in some we may grow slower, depending upon a number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles for the year. We have ample liquidity to fund our product roadmap, long-term capacity. Absolutely. I mean, Tesla has the best balance sheet in the auto industry. They just do. They're the best freaking they're the best freaking balance sheet in the auto industry. Profit. While we continue to execute on innovation to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Okay. Guess positive, but it didn't go nearly in detail enough. Product. Cybertruck deliveries remain on track for later this year. In addition, we will continue to make progress on our next generation platform. Okay. Big tech. Tesla stock sold off into these earnings. This was a stock that, by the way, we're going to listen to a full conference call on here when that baby starts in a bit. I can't wait for that to get rolling. But Tesla stock, let's see a 1 month of Tesla. This was just since October 10th. That's a heavy sell-off going into these earnings, right? So, but look at the stock's doing nothing after hours. And so what that tells you, when you see a stock like Tesla doing nothing after hours, it's not making a move up, down, that means everybody's waiting for the conference call to make their decisions. If they want to sell out of these shares, if they want to buy the shares, what they want to do here. Everybody's waiting for Elon Musk and the executive team, and they're all just waiting and saying, okay, what's going to happen here? Okay. Certainly that's what I'm waiting for too. I can't wait to get into that with you guys. Ooh, let's see. Look at this. Model Y starting price, inclusive of national and state delivery subsidies. Colorado. No way. Colorado? If you live in Colorado and you're not buying a Model Y right now, you got to be crazy. Holy smokes. Oh my gosh. That's insane. By the way, thank you everybody that's following here. Also, if you have Amazon Prime, make sure you subscribe now, because you don't want to miss any of the conference call, because Twitch might serve you up a random amount of like 3 minutes worth of ads randomly. So make sure you're subscribed here, especially if you have Amazon Prime. You get a free subscription from my understanding. And then Twitch won't show you any ads, because you don't want to miss any of that conference call when we get that baby started. So make sure you subscribe before we get into that conference call, okay? Cybertruck deliveries begin November 2023. That's exciting. Look at this. Look at this. That looks great, man. Look at that, babies. Oh, yeah. I love it. I love it. I love it. I'm going to get a Cybertruck. It's grown on me, man. I'm actually excited for it. And I'm not even a truck person, but I'm actually genuinely excited to get a Cybertruck. Megapack Factory in California. Okay. Gigafactory Shanghai. 1 millionth Model Y produced. Is that orange or is that red? It almost looks like it has an orange look to it, or like an orange red. That's cool, man. But very exciting. Very exciting. All right. Yeah, so obviously adjusted EBITDA continues to kind of drop here. Net income continues to drop here from much higher levels in the past. Operating cash flow is actually increased a little bit over the last few quarters, but free cash flow is kind of all over the place. This is something a lot of the growth investors in regards to Tesla are a little worried about. That right there, vehicle deliveries, the fact that we had a drop. A lot of the more growth style investors, like the heavy growth, they're a little worried about that, right? Tashikini.
Because people thought it was going to be a lot worse.
Yeah, I think there's a couple things. So one, we're hearing that the Cybertruck, slated for the end of November. I think people are happy with that. Tesla has continued to make progress cutting the price to produce vehicles, of course, which is very important for future sustainable gross margins. Although, of course, margins this quarter were impacted by the price cuts. What we're focused on is the long term. So I'm really excited to hear about their progress towards a future Robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that.
I'm puzzled by that idea, because if there's Robotaxis, I don't need to buy a car. Right. And so I'm not sure how profitable that. How are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it?
Yeah, so you may not need to buy a car. Basically, we think incremental car buyers might forgo that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this partnership and integration with Hertz. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future, you could imagine that Hertz could be a potential company that maybe houses and maintains these vehicles for customers. Ultimately, the reason that we think robotaxis are so exciting is because ultimately they'll be. I'm
going to pause this for a second. So I don't like all this talk about where they're even going there, like, oh, robotaxi, it's going to throw off a lot of margins and people might not need to buy cars in the future and all this stuff. Like, we're so far from that day that I don't like that type of talk. You can't predict something that you're not even seeing in the real world yet. Like, we don't even have robo-taxis on the road in terms of like giving people rides. Once that actually happens, I think you can start to see some trends and make some judgments here. Other than that, you're just playing a big guessing game. You've got to be able to see some trends and data to start making some decisions. When I made my bullish thesis on Tesla back in the day, right? Back in 2018, 2019, I was able to look at data points and be able to see the trends of electric vehicles. the amount of orders coming in for the Model 3 back in those days, and be able to look at all this, put all this together, and then make a judgment. These folks are trying to make judgments many times without having any data to go off of to make that judgment. That's just a guessing game. That's a silly game. You don't want to play that game, folks. Not when you're talking about investments, right? I think this is one of the reasons ARK has underperformed the market severely the past 5 years. I think this is one of the reasons, because they're trying to play a guessing game rather than looking at data and be able to say, okay, this is what's happening today. We can see this trend. Here's why it's going to get there. I don't know, man.
That'll expand the market for ride-hail as we know it today. And we think this could be very profitable. So our estimate for, our 2027 price target, which is published, is that we think growth.
It's not an estimate. It's a freaking guess. There's a big difference between an estimate and a straight up guess. These folks are doing straight up guesses. There's a massive difference.
Is that we think gross margins could be around 50%. So that's north of, the around 20% that we're seeing today. Of course, and that's 100%. Really driven by the autonomy
20%.
Business. We think this will be a services business model where they're charged per mile, and they'll get very attractive margins on that business.
Okay. And of course, that's 5 years out, to your point. But looking at the results here today, I mean, have margins bottomed? How are we going to know that margins have bottomed? And I ask that because we knew deliveries had missed already coming into this report. So the implication here potentially is that they're seeing softening demand even as they're cutting prices.
Yes, I mean, I think the auto market as a whole is not immune to the macro changes that we're seeing happening today. So I think it's, again, something that people somewhat expected going into this quarter. We've seen they're continuing to cut prices. But here's the big story, right? So EVs as a category, the prices are down like 20% year over year. That's really driven by Tesla. But now a Model 3 is cheaper than the average car in the U.S. That is huge. Good point. That sticker price difference is what consumers who are, the current auto buyers before we have robotaxis, and that's what consumers look for when they purchase a vehicle. So the total cost of ownership of an electric vehicle has been cheaper than a gas-powered car for some time, but that sticker price is what really changes, consumer.
See, and this is where ARK's gone wrong over the past 5 years versus the previous maybe 5 years, right? If you watch Cathie Wood videos back in the day, I'm talking this is like 2018, 2019, when I was getting in the stock. And she was one of the few bulls around the stock. Cathie Wood back in the day was very different than ARK nowadays. Cathie Wood looked at the data and made predictions based upon how the data was trending in regards to electric vehicles. She would consistently talk about how Tesla was going to be able to continue to bring down the cost of a battery for each vehicle and how much they had brought it down each year and how much that trend was going to continue, right? That was making investment decisions based upon data points, right? The ARK nowadays, unfortunately, is starting to get into just a guessing game of like robo-taxis, and we think they're going to be 50% margins and blah, blah, blah. This isn't making decisions based upon data. This is making guessing decisions. There's a big difference in that. And I want to reiterate this point so everybody watching this understands. When you're making an investment decision, are you making that investment decision based upon data and then forecasting trends based upon data? Or you just, I don't know, I think this is going to be huge and I think the margins will be 50%. We don't even have that product in the market. You have no clue what the margins will be there.
What really changes, consumer purchasing decisions. So I think, EVs will continue to take share. The growth of electric vehicles will outpace that of gas-powered car platforms, and that's not changing. So that's what we're focused on, again, for this long-term picture for Tesla.
Yeah, you mentioned Cybertruck and the expectation that deliveries start happening here in the fourth quarter. I mean, Americans specifically love their trucks. How big could this market be for Tesla? Can they take share from the traditional ICE-powered pickup trucks?
Sure. I certainly think so. And again, I think it'll be driven by price and performance. We see that electric vehicles offer better performance for the price. They're bringing down sticker prices. We saw that in this past quarter that an early reservation Cybertruck was auctioned for $400,000. So, I mean, it's already a collector's item before it's even in consumers' hands. I think that gives you an idea of sort of the excitement that we see out there. But past that, we've looked at
Tasha Keeney, in all due respect, that's not a collector's item. That's just simply somebody wanting to flex that they got the first Cybertruck. Okay, Tasha Keeney, there's a big difference. I'll tell you, if I was a billionaire, I would buy the freaking Cybertruck for $400,000 because I have so much money and I just want to flex on everybody and be like, I got the Cybertruck first. Like, that's a huge freaking flex. There's a big difference between that and a collector's item, okay?
The geographies in the U.S. that are, heavy truck buyers are very interested in the Cybertruck. I think that analysts are expecting, some analysts think that could be somewhat of a niche product. I don't think so. I think it could be huge. We're seeing Ford cut production shift at their F-150 Lightning line. I think that, I would be worried if I were Ford about this Cybertruck coming out.
Tasha, thanks for joining us. Shares of Tesla are up 1% now. It's time now for a CNBC News Update with Christina Partsinevelos. Christina.
Thanks, Morgan. U.S. officials said more than 350 U.S. citizens want to leave Gaza and have submitted requests to the State Department. The Rafah today to maintain. Hundreds of Jewish Americans and allies are protesting on Capitol Hill. Back to you.
Christina, thank you. After the break, Netflix is jumping after earnings, but has the stock lost its premium over the long term?
I do wonder.
Lexi B2 hearing aids powered by.
I do wonder how much Netflix after hours move is helping Tesla. I do wonder, like, if Netflix was down 12% after hours, like, what would we be looking at for Tesla overall? So can't wait for this conference call. Obviously, we got the CC coming up in a bit. I can't freaking wait for that, man. That I'm very excited for, and obviously everybody's waiting on this conference call, man. So Tesla up about 2.5% right now. I do believe a lot of that's because of this, obviously Netflix move after hours. Now, do keep in mind Tesla lost $12 a share in value in today's trading day. So far it's made up $6 of that trading value, right? So we're not even back to where we were basically 24 hours ago. We got to get another $6 a share back by the time the conference call's over to get back to even to where we were at today, essentially. Okay. So, Tesla 247. Everybody's just waiting on this conference call, man. I'll just be honest with you guys. Everybody's freaking waiting on this conference call to make their decisions around buying or selling Tesla stock. And keep in mind, in regards to Tesla, you got a large chunk of Tesla folks are long-term investors like myself. Maybe some of you guys watching this live stream right now that you've been in the stock for years and you plan on holding the stock for years like I do, right? But also there's a good amount of folks that are short-term traders in regards to Tesla. So as somebody asked when the call starts, we got the timer here. We got the timer here. And so the short-term folks are all just waiting. They're all just waiting for this conference call. And if they hear Elon come out and say some things like, hey, man, we think margins have not troughed. We think it could get worse from here. We're going to continue to be aggressive with pricing. Don't be surprised if the stock goes ahead. What are days of inventory for Tesla? Did I miss that, guys? Anybody have the days of inventory for Tesla? I don't remember seeing that in the report unless I missed it. Let me know in the chat if any of you guys saw that number. By the way, somebody says 500 plus people watching this live. Yes, thank you everybody that's here. I'm super excited for everybody here watching, and it's going to get crazy when that conference call starts, folks. That's going to be wild stuff. Anybody got the 8 days of supply? Somebody says 16. Oh man, I need to find the actual number here because I don't remember seeing the number. I must have missed it. Let's see here. Oh, there it is. Global vehicle inventory days of supply, 8 days. That compares to 13 days, 15. Weird. Very weird. The reason I say that's so weird, guys, is I'll just be honest. In Vegas alone, we're stacking inventory in Vegas, okay? The amount of Model Y, like if you need a Model Y right now, you can go get a Model Y in almost any configuration you could possibly want right now from Tesla here in Vegas. They got a long list of Model Ys here in Vegas, like crazy amount. I went through it in a whole video recently. And a good amount of Model 3s as well. So looks like a lot of you guys are saying, I'm going to get into the chat here for a little bit. A lot of you guys are saying, oh boy, wow, a lot of Teslas. Amazon and PayPal, which one's your biggest? It's got to be one, Amazon or PayPal, right? Some of you guys, PayPal is your biggest investment. Palantir, we got a Palantir, some Palantir bulls in the house. A couple people, Palantir is your biggest investment. Microsoft, somebody says Meta. Yeah, that would be me in the public account for sure. Meta's my biggest investment in the public account, right? Nvidia is theirs biggest investment. Amazon. Ooh, okay. Simply says Apple's their biggest. PayPal's their biggest, then Palantir. Meta. Tesla, but I sold some earlier today, somebody said. Okay. So overall, I would say a lot of you guys, your biggest investment's Tesla that are watching this right now. Some of you guys, there's actually a lot of you guys out there. PayPal's now your biggest investment. I definitely saw some Nvidia, saw some Metas out there. Definitely saw some Microsofts. And then I would say I saw a lot of like randoms for some of you guys. And I think sometimes it comes down to how big is your portfolio overall. I think that's what it also comes down to, right? Boy, it's coming, folks. Less than 30 minutes. Less than 30 minutes. Look at a Tesla, man. It's not doing a dang thing after hours. Everybody's waiting on this conference call with Elon Musk in the team here. Oh, man. Everybody's waiting on this thing. Everybody's waiting on this conference call, and it's freaking coming, man. It is coming. Oh, boy. Everybody's just waiting on this guy. That stock will not move. That thing will not move. I get rid of some of these tabs here. Oh.
Phil LeBeau's got the details. Phil.
They would be talking so much trash about Tesla right now if those guys were on.
On the top on the bottom line, and that's because the gross auto margins, excluding zero-emission vehicle credits, appear to have come in slightly better than what the street was expecting. Let's do the numbers and then the numbers within the numbers that people are really paying attention to. Earning 66 cents a share in the third quarter, Tesla was shy of expectations of 23 cents a share. Revenue light of expectations, but not by a lot. 23.35 billion versus 24 billion. Gross auto margins, excluding credits, expected at 17.5%. Came in by most calculations at 17.9%. And then you have these numbers. Adjusted EBIT margin is 16.1%. That's down from 23% a year ago. 7.6% operating margin. It was 17% a year ago. And operating cash flow of $3.34 billion. Then there is the question of deliveries, and we just got some news within the last couple of minutes. First of all, when they put out the release, they reaffirmed their guidance of delivering 1.8 million vehicles this year, which means they need to have a fairly strong fourth quarter, a record fourth quarter, we should say, or record quarter for deliveries. And then the Cybertruck announcement. The company said in the release that they are on schedule for deliveries this year, and just a few minutes ago, Elon Musk tweeted out that they will do a delivery event at Giga Texas on November 30th. So as you take a look at shares of Tesla, keep in mind that the real news is going to come here in a few minutes, Melissa. That's when the conference call begins. And a lot of questions Elon Musk will be facing regarding pricing pressure, particularly in China and in Europe. Now, I should point out, during the last conference call, remember they do these the questions from investors, hand-picked questions, if you will, and the pricing questions didn't really come up until well into the call. Let's see how quickly they address it this time around and what kind of news we get. And again, that starts at 5:30.
Yep. Phil, thank you. Keep us posted. Phil LeBeau. It is a peculiar move in terms of the after hours. Not really a big movement as we normally see from Tesla. What do you make of this quarter?
It's amazing how low vol it is when you consider. And by the way, if you look at the chart, also where it tested in these aftermarkets, and I realize it's aftermarkets, but this uptrend from January 3rd is very.
They do have Tim Seymour on.
Tests along the way. So
not Dan
the fact that they're holding deliveries in line is, I think, the most important part. The price cuts, I believe, are not as significant as they should be. This is a company also that's going to have $850 million in free cash flow in that quarter. So it's a company that's generating free cash in a business that, again, this sounds a little bit like Netflix with other streamers, right? Sounds a little bit like the other EV guys can't make money here. I'm not a champion of this stock, mostly because I think the valuation at this point is not something I get behind. But it's hard to argue with. They're consistent here. They're talking about deliveries over necessarily worrying about pricing and margin, because they ultimately could sweat people if they.
Dan Nathan must be so mad he's not on today. He would be talking so much freaking trash about Tesla if he was on.
But it's came in now. Number might be wrong, but
that man hates Elon Musk and hates Tesla. Like,
correct. I'm sure Gene will know if and when he's on, but it's a margin story and it's a free cash flow story. Free cash flow was disappointing, margins seemingly so as well. But if that margin number is wrong and it's close to what Phil said, maybe the market's giving them a pass.
The X credit always causes a ripple in this whole analysis. But I mean, if you think of whatever the margin level is, if you think that most of the price cuts are in now, that there aren't that many more price cuts to come, then maybe margins have hit a trough.
And that's the bull case.
Anybody want to guess how much money I was down on just my Tesla shares here today? I'll take a screenshot of that and pop that up on the computer here in about the next minute. If you want to guess how much I was down on just Tesla stock today, alone in the public count, feel free to take a guess in that comment section.
But we expect them to make a lot more cars, right?
Do we care about Cybertruck? I mean, you know.
Yeah, I think you do, right? Because the margins are going to be bigger on there. They're coming from a very low bar. But to your point, you're sacrificing, and your point as well, they're sacrificing margins for bigger share. But now with the UAW, that headwind has taken Ford and GM out of the EV business. It's Tesla.
Well, it hasn't taken them out of the business.
Oh, they lose money hand over fist. They're bleeding. They're hemorrhaging. Their margins are terrible. It's Tesla's game to lose.
But the strike didn't do that. I mean, they were. I mean, your point is well taken that they're distracted and that these are businesses that aren't making money. But I think they're going to be real competitors. I think the whole argument against Tesla for me is valuation and competition. I realize they're far ahead, but I'm not ready to give up on.
I think at least one or two of you guys got the exact amount in terms of how much I was down today on Tesla. A lot of you guys are pretty right on.
1.03 came at 894, and so I'm wondering why is that? What?
I'll put it on the screen right after I'm done. Listen to Karen here.
Smaller deposit, is that how much is that translated historically into sales? How good of a read is that?
Yeah,
I don't know.
We'll have much more on Tesla's quarter in just a few minutes. The conference calls will get underway in about 10 minutes' time. We'll also have Gene Munster on to give us his analysis.
Oh, Mr.
Meantime,
Bullish.
let's get to the unstoppable 10-year. Yield today closing in on 5.
Mr. Bullish, already, folks, ready to see how much I was down just on Tesla myself? There's several of you guys that got this one. I will say that. Several of you guys I saw in the chat were pretty right on in regards to this one. Down $20,000 on my Tesla shares here today. So, no bueno. No bueno, folks. No bueno. Don't keep us waiting too long.
And we believe there's still meaningful room for improvement there. Regarding Autopilot and AI, our vehicles now driven over 500 million miles with FSD beta, full self-driving beta, and that number is growing rapidly.
Awesome. We just missed a huge chunk of the conference call because Tesla doesn't know how to freaking work their tech right.
GPU cluster of H100s. We think probably bringing it into operation faster than anyone's ever brought that much compute per unit time into production, since training is the fundamental limiting factor on progress with full self-driving and vehicle autonomy. We're also seeing significant promise with FSD version 12. This is the end-to-end AI where it's photon count in, controls out. Or really, you can think of it as there's just a large bit stream coming in and a tiny bit stream going out, compressing reality into a very small set of outputs. Which is actually kind of how humans work. The vast majority of human data input is optics.
Somebody said it sounds like Elon's just waking up. That's the way Elon Musk almost always sounds.
Like the car, photons in, controls out, with neural nets, just neural nets in the middle. It's very interesting to think about that.
Thank you. The next question from institutional investors, could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Berlin and Austin factory, the current priority is actually maximize the output from our existing lines by laser focus on efficiency improvements. As always, maintaining a high quality and reducing per unit cost will be as critical as growing the production volume. For Mexico, we're working on infrastructure and factory design in parallel with the engineering development of the new production that will be manufactured there. That's all I can share for that.
In Mexico, we're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory. I'm worried about the high interest rate environment that we're in. I just can't emphasize this enough that for the vast majority of people, buying a car is about the monthly payment. And as interest rates rise, the proportion of that monthly payment that is interest increases naturally. So that's, if interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply cannot afford it. And we are tracking, I believe, at this point for Model Y to be the best-selling car on Earth, but not just in revenue, but in unit volume. If you compare that to the other vehicles that are, number 2 and number 3 and whatnot, they cost much less than our car. We're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing. But informing people of a car that is great that they cannot afford doesn't really help. So that is really the thing that must be sold, is to make the car affordable, or the average person cannot buy it for any amount of money, or they simply can't afford it. They can't afford it. So this is a big deal.
Okay, thank you very much. The next question is, when do you expect Model 3 Highland to be available in the US? I just wanted to address that, unfortunately, we don't answer product-related questions and timings on earnings calls, so let's go to the next one. Current sell-side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
Thanks for the question. When we look at 2024, there are a lot of moving pieces. Elon just talked about what is happening in the macroeconomic environment. So we're focused on growing our volumes in a very cost-efficient manner, and are carefully reviewing all our options, and we'll be able to provide a much more meaningful update at our next earnings call.
Yeah, I mean, the risk of stating the obvious, it is not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. But I think we will grow very rapidly, much faster than any other car company on Earth by far.
Thank you. Next question is, do you have an approximate timeline in mind for the Robotaxi, driven or non-driven? What excites you most about how this project is progressing?
Well, the Robotaxi is necessarily non-driven. I guess I'm very excited about our progress with autonomy. The end-to-end, nothing but nets, self-driving software is amazing. I drives me all around Austin with no interventions. It's clearly the right move. So it's really pretty amazing. And also that same software and approach will enable Optimus to do useful things, and enable Optimus to learn how to do things simply by looking. Extremely exciting in the long term. As I mentioned before, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or infinite for all intents and purposes. So And I don't think anyone is going to do it better than Tesla, not by a long shot. Boston Dynamics is impressive, but their robot lacks a brain. They're like the Wizard of Oz or whatever. It means shots. Yeah, lacks a brain. Shot. And then you also need to be able to design the humanoid robot in such a way that it can be mass manufactured. And then at some point, the robots will manufacture the robots. Now, obviously, we need to make sure that there's a good place for humans in that future, and we do not create some variant of the Terminator outcome.
Oh, thanks for making sure the world has a place for humans. I appreciate that, Elon Musk.
Pull up the humanoid robot. So, basically anyone will be able to shut it off locally. And you can't change that, even if you put, like a software update, you can't change that. It has to be hard-coded.
On the cost question, I guess from the vehicle side, as Drew mentioned earlier, we are always trying to engineer our products to be cheaper to make and more efficient to make. That comes obviously on the engineering side as we come up with new innovations, but as well on the supply chain side with our partners. We work with them to automate some of their lines, remove their bottlenecks and their high costs as well. On the logistics side, getting parts to the factory. It's not like a one thing that you have to attack cost everywhere, and we do it ruthlessly at all times.
Operations efficiency, all of the above.
Yeah, I mean, I would say there's a whole laundry list of things which we are chasing. We internally call it the cost attack, where we're literally going line by line and saying, how can we make it better? And it's a grind.
It's a grind.
Time.
It's a game of pennies. It's like Game of Thrones, but pennies. First approximation, if you've got a $40,000 car and roughly 10,000 items in that car, that means each thing on average costs $4. So in order to get the cost down, say by 10%, you have to get 40 cents out of each part on average. It is a game of pennies.
We play it willingly.
We play it.
Yeah, we've done it many times. Even something as simple as like a sticker. Like there's too many stickers internally in the car that nobody ever sees. Something as simple as a QR code. You might think, well, putting a QR code on part, why not just put them on there? It's like, well, are we actually going to use that QR code?
Costs a penny.
Yeah, exactly. And then inevitably, sometimes the QR code doesn't go on properly, or you can't read it properly, and then it stops the line.
Costs more than a penny.
Yeah, absolutely.
So
it's chipping away with it. I mean, it does feel like digging a tunnel with a spoon at times.
Very much escaping prison.
Yeah.
On top of it, like we said, we did some factory upgrades, so we expect volume to go up. That would also bring some savings from higher production. But then on the flip side, we're going to be ramping a new product like Cybertruck, which we talked about. So, so those are the real puts and takes which we are working through.
Yeah, but there's not like some accidentally, some brick of gold that we've shot and left in the car, unfortunately. And it's, we're trying to be very rigorous about improving the quality and capability of the car, because, it's like any fool can reduce the cost of a car by making it worse, and just, deleting functionality and capability. And that's how cool this sort of any fool. It's like if you want to lose weight and you say, well, I need to lose 15 pounds right away. Well, you could.
I'll share my thoughts after this conference call is over, which probably doesn't have much time left.
Full fat. so sort of like, you
gotta work at it.
Yeah, you actually have to eat less food and work out. That's the actual way. And
doctor's advice.
Yeah, it's not, super fun because food is delicious. And I personally am I don't love working out. I know some people do. I wish I did, but I don't.
We know, Elon.
Unless moving the mouse consistent working out, in which case I love moving the mouse.
You weren't confusing us there, man.
All right, let's go to Colin Langham from Wells Fargo. All right, unfortunately, that's all the time we have today. Thank you very much for all of your good questions, and we'll see you again in 3 months. Thank you very much.
It's a long 3 months. Oh, it's a long 3 months. Oh, that's a long 3 months. Okay, so first off, I'm freaking cooked, man. I've been on this live stream for like, I don't know, 4 hours or whatever amount of time it is. It's almost 4 hours, okay? So I'll do a super in-depth video for you guys on the main channel tonight. I'm going to take the next 30 minutes, collect my thoughts about everything I just heard, all the numbers. I'm literally going to go by myself for 30 minutes and just think. No devices around, no electronics, and just let everything hit me that has just transpired in those last 2 hours or so. And I'll make you guys a beast video on the main channel tonight that will share super in-depth thoughts on everything. My initial thought, my initial assumption in terms of stock price is we're going under 200. And that doesn't mean tomorrow, by the way. I just mean in the shorter term here. We're going under 200. And I think we're probably going to go on, I think it's a 50-50 if we go under 150. Short term. I don't think anything sets up good for Tesla short term. From everything I just heard right there, it's just, there's so many things working against the short term. Margins sound like they haven't bottomed yet. Cybertruck, I knew that was having problems. People try to argue with me about that. I said, no, believe me, we're having problems with Cybertruck. Sure as enough, Elon admitted on that conference call they're having troubles with Cybertruck. I freaking knew that. I knew revenue was struggling. I knew margins were going to come in weak. I knew profitability was going to come in weak, and everything I thought came true. And so none of that bodes well for the short term for Tesla stock. The long term, everything's intact with Tesla stock, obviously. The long term, we're looking good, and I continue to be a proud shareholder. Oh, somebody got a nice orange Lamborghini SUV. Congrats to them. I've never seen that. What house is that going to? Should have got a Model X, you freak. So good deals to that Lambo SUV. So, yeah, I'm going to take the next 30 minutes. I've been on this thing for 4 hours, 4-hour live stream. And just think, I'll prepare you guys a beast video tonight for YouTube on the main channel. And then we'll go from there. Looking forward to tomorrow's live stream, obviously. Tomorrow's going to be interesting because we're going to see what the fallout is from this Tesla conference call and the numbers and everything we just heard. And then we got more earnings coming tomorrow. So, but yeah, right now I'm just need to go collect my thoughts. And we'll go from there. So anyways, appreciate every single person for showing up here today. Thank you, everybody that's following me here on Twitch. Also, thank you, every single person that has subscribed to me. Thank you so much for being here, folks. Thank you for being subscribed. Thank you for following. And yeah.